It's morning rush hour, and London Bridge is full of commuters heading across the Thames to the city. Thousands stream into London, making the commute of up to 2 hours from the outlying areas. Few can afford to live here.
The costs of living in London are far, far too high. If you want to bring up a family, it's impossible to do it in London.
If you're looking to buy just yourself and you wanted to save and live a life in London, then that's it's just impossible, I think.
Well, a house, two-bedroom house, could be 280,000 outside of London. It might be double that in here.
The city, one small area in the heart of London, is a leading global finance centre. Property here is some of the most expensive in the world. And some are predicting prices will fall as a result of the Brexit vote and the impending Brexit. One brokerage expects a 20% fall in some areas over the coming year. Estate agent Henry Pryor is sanguine about market jitters. They mean interesting opportunities for the buyers he represents. He says there are plenty of people still looking to buy in London. If prices soften, all the better for them.
What's happened since the referendum with the vote to leave the EU is that sellers have found themselves unable to command the high prices that they were asking on the 23rd of June. And on the 24th of June, for example, I found a house in Notting Hill that had been on the market for £4.5 million, and we've agreed terms to buy that property, that very same property, for nearly just over 3.5 million, so nearly £1 million less.
Corey Askew is also an estate agent. He is selling this 4-room apartment. The asking price is £1.5 million. He thinks predictions of a collapse in the property market are wide off the mark. He concedes some people did get nervous around the time of the referendum. 3 purchasers backed out of the deals on the day.
All 3 of those properties went back on the market, and all 3 of those properties were resold before the end of the week. One of them, in fact, for more money than we had pre-Brexit. So I think it just goes to show that the reality on the ground, despite some of the headlines out there, the reality on the ground is very different.
So what is really going on if some talk of collapse and others of strong demand? Tim Sankey manages a UK commercial property fund with assets of more than £3 billion. After the referendum, some investors sold their shares in the fund. To pay them, Sankey had to sell properties, some at a loss of up to 10%. Withdrawals from UK property funds in June alone amounted to £1.4 billion. The fear is that the UK could fall into recession.
The UK property market is very, very driven by the underlying economy. You know, if the economy is doing well, businesses grow, and they take on more space, they pay higher rents, they grow their businesses, and that's good for growth in the UK property market. So equally, if you think if the economy might go backwards and go towards a recession, or at least slow, then that should be negative. So you can see why investors were concerned, and that's fair enough.
The deal the UK and the EU will make on the terms of Brexit will no doubt influence property prices. But the talks have not yet begun and will take years. For now, however, Corey Askew is pretty optimistic.
The demand is so insatiable for London property, and the supply is so finite that when you cut out all the hyperbole and all the commentary, the fundamentals are very, very basic. They will never build enough property in London in order to satisfy the demand, the global demand for London property.
After a hard day's work, commuters head back across London Bridge to ride the train home. They are not directly at the mercy of the sizzling London property market.
I like the countryside. I don't like to live in London. I like to have kind of space around me and greenery.
And so, a long commute is the price many are willing to pay for a quieter life in the country.